Oh, baby. I've been waiting for this one. Apple, you made me wait. Mr. Tim Apple made me wait for this one, okay? And I'm going to enjoy it. I'm going to enjoy this one. Just reported earnings. We're going to talk about them. After hours movement down 0.5%. If you recall, we talked about this just on Sunday. My expectations are high for this. I expected a beat. That's right. This is a high one. EPS line, I thought it was going to beat by around 50 cents. Kind of crazy of me, I know. But the revenue is where my big bet was. I think this company, I predicted they'd beat by $5 billion off of the estimate. Let's see what they're able to do. It doesn't look like it. I'll tell you that from the stock's reaction. Doesn't look like it. I would have taken a big bet on Apple to really perform well after this earnings report. I really would have. So this is somewhat of a shocker to me that the performance isn't there. So I'm curious if something went wrong or not. But you look at the stock's performance over the last month has seen some favorable reaction, up around 9%. Year to date, up 13%, really outperforming the market as a whole in the last. When you're looking year to date, in the last year, up 57. So performance has been pretty good on this stock. Could be part of the reason why it's not banging off. But holy boosh, man! Holy boosh! That's what they say, man. Look at that. GAAP EPS line of $1.30 beats by 29 cents. Not quite where I expected it. Look, I thought this company. I thought they were putting up $1.50 on the EPS line. It's a bad estimate by me, it really is. But it was closer than the analyst estimates, though. That's what you got to consider. My estimate, a lot better than what the actual professionals that get paid to do it are guessing. Just throwing that one out there. My analysis is actually a lot more accurate than the professionals, but kind of expected a little bit higher there. But my assumption is there might be a little bit. The recovery might not have been there in terms of the supply chain and cost of goods. That may have impacted that, but we'll take a peek. The biggest shocker that you've ever seen, revenue of $81.4 billion. I thought this was an $80 billion quarter. This is an $81.4 billion quarter. Growth of 36% year over year is incredible. It's a beat by $8 billion. $8 billion. That's $8 billion beat. This is incredible. That's incredible. I mean that's an absolute smasher. And you're telling me the stock's not up. Here's where I told you the success story was going to be. I told you they were weak on the iPhone estimates. I knew it. Every single quarter, these analysts are weak on the iPhone estimates. They have no clue what it looks like. But here I am telling you the truth. iPhone revenue came in at 39.5 compared to the consensus of 34.5. That's where a $5 billion beat is alone. I told you, and I tell you every time, these analysts have no clue what's happening at the core business here. They don't have a clue what the performance looks like for this company. I told you to look at iPhone, and I told you to look at services. And what can I say? So far, iPhone, it's what you should have looked at. These analysts are bums. I mean, I should take their jobs, frankly, because I know a lot more than they do. Mac, still a beat. 8.4 compared to, or 8.24 compared to 7.99 consensus. iPad, still a beat. 7.37 compared to 7.13, which is nice to see because you saw with Microsoft, they didn't quite hit on their estimate for tablets. Wearables, home and accessory, that's a beat. 8.8 compared to 7.63 consensus. That is fantastic that they even beat that number. But again, this is the leading wearable company in the world, so not a shocker. And services, I told you to look at it, $17.48 billion compared to $16.32. It's another $1 billion beat right there. Beat. They're beating it. I'm not going to repeat saying that at all. So this is fantastic. We'll get into the press release, obviously, and see what other beauty we have to look at. But this alone, look, this data, I told you it was coming. I told you it was. Just don't know how the stock's not reacting to it. I think it's kind of crazy. There must be something deep down hidden in here we're not seeing. Also worth mentioning, they announced, obviously, inline dividend of 22 cents. Nothing crazy there. Let's dig into the press release. I'm zooming in for you because I know if you're like me, you got these Coke bottle glasses, you can't see a lick. I'm blind as a bat, man. And I still see better than these analysts. So let's see what we got. Let's see what we got. A record June quarter. Okay, I hear you. I hear you, Luca Maestri. I hear you. Press release never significant here with none other than the Tim Apple. So just some couple words from Tim Apple himself. This quarter, our team is built on a period of unmatched innovations by sharing powerful new products with our users. Again, this is against an incredibly tough comp year, and they smashed it out of the ballpark at a time when technology to connect people everywhere has never been more important. I respect it. By inspiring a new generation developers to learn code, moving closer to our 2030 environmental goal, and engaging in urgent work of building a more equitable future. Don't care about your environmental goal all that much, frankly. Definitely a PR move for them. We're going to look at the financial statements because it's something you got to look at. Press release for Apple, it's never anything impressive. It's just where they put quotes from the CFO typically and none other than Tim Apple himself. So from a product perspective, net sales, you see product obviously biggest part of the company, but they give a comparison year over year. Good growth here when you're talking about 9 months ending, significant growth. We're talking about $60 billion growth there. 3 months ending alone, right around $20 billion as well. Total net sales up $30 billion for the 3 months. So when you combine services, it's beautiful. 9 months ending, total net sales up. Oh gosh, I mean it's incredible. We're talking about $75 billion. That's right. I'm getting aggressive. Getting aggressive with you. So it's good to see operating expenses. It's a category I like looking at as well. You actually, all things considered, the research and development line here, it hasn't really increased as much as I might have expected it to, based off some of the innovations they've been able to make. But again, a lot of these products are already out and developed, so that could be partially why you didn't see as much of an increase in that. But R&D didn't increase all that much, so operating expenses not in a terrible spot by any means. Net income line, it's what I love to see on this company. $21.7 billion this quarter compared to 11.2 when you're talking about a year ago's quarter. Doubling. That's double. And if you look 9 months ending, $74 billion compared to $44 billion, $30 billion growth in net income year over year. What do you want me to say? It's beautiful. It's a beautiful line. The company's printing money at a pretty good rate. We're talking about $21 billion compared to a revenue line here of $80 billion. The company is definitely printing money. It's good to see that. EPS line double of what it was last year by every metric. I mean, it's double of what it was. We like to see it. You're talking about different area segments. Every single area saw growth. Every single region saw growth. And obviously, when you're talking about specific categories, iPhone's been the huge winner. We're talking about $40 billion increase year over year when you're looking at 9 months ending. Services, too, up $10 billion year over year. Significant numbers here. Let's look at this balance sheet on this stinker, man. Not even a stinker. This is a beaut, man. This is no stinker. This is you take this earnings report to prom and be proud to take pictures with it and reminisce about it 10 years later because you're lonely and all alone. I mean, that's what you're going to do. Not my story because I wouldn't go to prom because I'm not a loser. See that? I'm not a loser. Total current assets here of $114 billion compared to $143 billion of 9 months ago. 9 months comparison here. So decrease in total current assets. We see that because of the marketable securities has declined quite a bit. I'm guessing they sold a lot of that off there, turned it into cash and probably spent it off. Let me see. Reduction of debt. Let me just guess. Better be, otherwise I'll be looking like a fool. But total assets in general did increase despite that big decrease in total current assets, 329 compared to 323. Not bad. Growth of $6 billion on that asset line. Made up for it in a long-term marketable securities. That's probably where that cash went, actually. So forget I said anything. They just turned into long-term marketable securities, and I'm really just a doofus. Hate being a doofus, man. Liabilities, you're looking at current liabilities popping in at 107.7 compared to 105.3, so a slight increase there. Total liabilities in general at 265 compared to 258. Did not, all things considered, it increased by very similar numbers. So stockholder equity saw a decline of around $1 billion, 64.2 compared to 65.3. Not a number I'm incredibly shocked at. I'm not upset by it. I do think the way this company prints money, that's why I'm not worried about the debt line here. And stock, really, and when we talk about equity here, it's not bad. The balance sheet's massive, and that's what I like about it. I like that it's a big balance sheet. I love a big balance sheet. I love a big balance sheet. Don't mind me getting a little excited over here. That's why we'll keep the camera from the waist up. Yeah, not shocked that the equity went down a little bit. I'm not concerned just due to the fact that this company is able to print money on, such major degrees here. We talk about the stock's value. $2.5 trillion nearly in market cap could be why this isn't going up after hours. There's a chance. We'll see what the conference call holds. I believe it's at 4 p.m. Central, which is right around when this video goes up. I think it's going up a little bit afterwards. So we'll see. That could turn things around. But the stock's down now, which I think is crazy. But the market cap pretty high. You're talking about a company that's annualized revenue is going to be around $400 billion, which I don't think means it's that crazy high value. You see 2.4 trillion, you're like, that's crazy. But in terms of what they're bringing in cash, $400 billion in a year, that's not scaring me. It's really not. The way that they're able to easily smash a tough comp quarter, it warrants the stock being at a very high value. When we're talking a P ratio of only 32, it's very cheap compared to the entire market. This stock is still at good value. It still is. Even even near 52-week highs, this stock's still it's a good value. I can't lie to you. I like what this company's doing. The fact that they were able to smash this earnings out of the park, I think it's mostly because analysts don't have a clue what they're talking about, and I'm smarter than them. Shoot, I'll go to Harvard and they could go to a community college, basically, is the intelligence difference here. But that's rude. It's rude to me. That's what I got for you. I like this stock still. Buy and hold, 10 years. You're set. You're going to be happy in 10 years. That's what I got for you. I hope you have a good one.